Welcome back. You're watching Bazaar Morning Call. It's a Wednesday morning. The US markets closed up with strength. Yesterday, Indian markets were very buoyant, closing at record highs for the Nifty, Sensex, even the Nifty Bank. The mid-cap index hit intraday record highs, but by the close of trade, we did see some profit booking, and the mid-cap index ended with a cut of close to about 0.4%. Deven Choksey is now with us on the show. Deven, the story in the market has been about the comeback of banks, the catch-up rally that's currently taking place. Sapna was just putting out that story about how PSU Banks are likely to see some QIPs, which will help bring down the government stake. We could see that in Bank of Maharashtra, Central Bank of India. Your thoughts on this particular development, how it impacts PSU Banks?
Yeah. Good morning, Nima. Well, certainly, I think this is a time when probably most of the promoters should be catching out, given the kind of rally that the market has given to individual stocks, be it in the public sector space or be it in the private space. Most of the companies, even in private space, also when you look at, I think some of the companies, I think they are putting at a significantly high premium valuations. And that's the time when the promoter would probably take some money off the table from this company. Is not very surprising. At the same time, coming to the public sector banks in particular, there is a significant amount of appetite also coming in from the financial investors. And the financial investors definitely want to enter into these stocks, given the kind of long-term prospects that one is experiencing in the economy. So from that perspective, if the government is selling part of their stock and cashing out part of money at a total valuation of PSU banks, I'm not completely sure about the number, but somewhere around 45 lakh crores kind of a market cap of all the banks put together. Given that situation, even if government so decides to cash out, I think 2.5 to 5% also out of this cap, it's a significant amount of money that we are talking about getting collected into the balance sheet of the government. So from that perspective, I think it serves the purpose for the government. On the other side, I think these banks are quoting not at very expensive valuations. So somewhere around 1 to 1.5 to less than 2 times price to book value, at which I think these banks are quoting at. So from that perspective too, I think the financial investor would see the limited downside in these stocks at the same time opportunity to make money. So it's a win-win, I guess, I think, to cash out at this juncture and accommodate some new investors into the portfolio of capitable of the company, respective companies.
Okay. In the private sector space, Deven, hi, good morning. I wanted your thoughts on ICICI Bank. It's been a big mover, 12% higher from the 4th of June lows. Do you reckon that there could be more upsides here in ICICI Bank, and what's the best way to approach it?
Yes, Sonia, good morning. Well, on one side, I think the HDFC Bank started moving up, and as a result of which, I think it is naturally pulling some amount of weight into the banks. And as a result of which, the investors would also, I think, do the weight allocation accordingly. So from that perspective, I think some of the banks, I think like ICICI or Axis for that matter, even IndusInd, I think those banks are likely to see the action purely because of the weight allocation, weight balancing, which may happen into the portfolios of investors. Other fundamentals remain equal. I don't think that I think they have changed as far as I think the fundamentals are concerned. On the contrary, most of these banks are available at a valuation which is not so expensive compared to the overall market. So I believe that I think likes of ICICI, likes of HDFC, SBI, they are relatively, I think, available at a compelling valuations for investment. All these banks are also suggesting that in next 4.5 years time, the size of their balance sheet is going to grow double, given the kind of AUM growth that they are experiencing. And at the same time, I think some amount of monetization possibilities from their subsidiaries is not ruled out in this 3 to 4 years time. So given these actions on plan, I would think that 25-30% kind of an upside into respective stock is not ruled out for 12 to 15 months time.
There have been lots of stocks to discuss, but I just want to pull back a little bit, morning, and ask you slightly near-term market, broader market question. So the budget is around the corner, and it seems that after the election results, right, where the victory for the incumbent was weaker than expected, and now they got allies, etc. Markets just sort of clean moved on, right? We're talking about new highs, both for the Nifty, for the Bank Nifty. There's been really no price to pay except for that one day. Now think of the other sort of the corollary, right? If you had the big numbers and an absolute majority, by now we would have had that 100-day agenda, etc. All of that would have come through with full force, right? which so far we've not. So I'm just saying that do we need to kind of be mindful of some of that as well? The first indication we will get about the trajectory for the next 5 years is going to be the budget, which is about a month away, directionally speaking. We're all, of course, assuming that it is absolutely business as usual. So just your thoughts and what it means for the market, if anything at all. Go on.
Yes, Prashant, good morning. Well, you're spot on. Actually, I think there is nothing more to think about as far as the budget is concerned, because more or less, I think the fabric is woven. You are likely to see the continuity of the allocation of expenditure which the government has spelled out even in the interim budget. To me, the interim budget was almost like a full budget, I think, in which they covered almost all areas. But having said that, I think they may probably, I think, want to increase some part of the allocations in the areas where probably I think it matters most, particularly for the generation of employment, as the agenda may be, which is infrastructure and agriculture to begin with, where there may be, I think, some tinkering with the allocations. Additional amount of money could get allocated from whatever they had shown in the interim budget. So from that perspective, the market has taken a note of it, and according to me, I think market is moving on with that particular spirit. That budget is going to be the growth provider budget going forward. Well, I guess I think the everybody wants to see a correction in the market at this point of time because the valuations have scaled up, I think, to a good amount of premium level, particularly in the mid and small cap companies. I think somewhere I think it is unimaginable amount of premium valuations have been given to some of the stocks. Whereas on the other side, I think the frontline stocks into the Nifty basket and all, they are available reasonably at an attractive valuation given the growth that the respective companies are assuming in that. So from that perspective, I think it would not be very surprising if you see the profit booking in the premium valuation and money shifting to some of the frontline stocks, given the kind of compelling proposition that they are offering at this point of time. That would not be very surprising. Another aspect is the liquidity. The flow of money into the market is continuing. With this flow of money coming in, even slightest of negative will not live for a longer period of time. I think this particular negative will once again overcome because of the flow of money is strong and investor wants to deploy that money back into the market. So this equation is suggesting that liquidity is intact. When the liquidity is intact and the fundamentals are intact on the other side, I think the market will have limited ability to do the correction. And maybe I think every correction will be bought into by the select investors.
Deven, come in on Raymond if you have a view.
No, since we don't have the coverage on the company, only different computing.
Okay, you don't have a coverage on the company. Got it. The other stock, Deven, I wanted to talk to you about was Tata Motors because, there is a very interesting JP Morgan note this morning where they have a target price of 1115 and they talk about how the retails in the month of May were very strong and also there is perhaps re-rating that we could look at in this stock. It's consolidating around these 1,000 rupee mark, but do you think that there could be more upsides for Tata Motors in the near term?
Yes, Sonia, the underlying proposition for segregating the commercial vehicle business and the passenger vehicle business and concentrate significantly on both the businesses is the name of the game going forward for this company. In my viewpoint, I think whatever in previous years, I think the mistake would have happened in the business of the company. Probably, I think they are trying to correct it by way of keeping a separate focus on both these areas of business. And that is what is exciting as far as I think the outlook on the company is concerned. In my viewpoint, I think the JLR portfolio, Tata Motors electric vehicle portfolio, and also the ICE and flex engine portfolio that they have on the passenger vehicle side, I think it offers a reasonably good amount of clarity with the zero debt, and at the same time, JLR also proposing to get out of the debt by the end of this financial year, is suggesting that the passenger vehicle portfolio is likely to get the higher amount of weightage into the portfolios of the investors. The Hyundai IPO is going to be a catalyst wherein I think you are likely to see additional flow of money coming into the respective portfolios of the investors. And that is where probably higher allocation of money would take place. So both on the fundamental side of the activity and at the same time, I think the market side of the activity wherein the new money is getting into the portfolio from the investor will keep this particular stock active as far as I think the market price is concerned. To me, I think the 20-25% kind of appreciation in the stock price is not ruled out at the current levels.
All right. Got that. Deven, we'll let you go. Thank you very much for being with us here on CNBC TV18 as always. Good conversation.